All right, so thanks for joining me. In today's video, what we're going to do is we're going to go over a calendar spread and how it makes you money. And how do they work? How do they behave? And kind of how might you apply it in today's market situation? All right, so before we do that, if you're interested in learning more and you want to continue your studies, check out our website. Go to the blog section. There's a lot of free stuff. There's also a start here section if you want to completely brand new to trading options. There's an options 101. And if you want to join and do a one-on-one coaching sessions, check out the coaching session. There's also things I deal with people that want to work, 3 months, 6 months, or even a full year and longer together, where we meet up kind of on a weekly basis. All right, let's take a look at kind of a calendar spread. How do they work? How do they behave? I'm going to go ahead and do this example from Zoom. So this is going to be kind of the content that I'm going to be looking at. And Zoom right now, if you look at the chart, just to give you a reference point, because you might be watching this video at some point in the future, since I pre-filmed some of these. You'll see that Zoom is kind of up about $3 today, 2.87% at $120. It's been going down and now it's kind of moving to the upside. So when you set up a calendar spread, you could set up a calendar spread where you're looking to make money from a sideways move, or maybe for it to go and touch a certain area, whether it touches on the upside or kind of the downside. So that's kind of the way to do a calendar spread. So how do they work and how do they behave? So basically what you're doing is, let's say you're selling something at 10 days and you're buying something at 20 days out. The one that you sell at 10 days might decay, let's call it $50 a day. And that's going to go in your favor. But the one you buy, it might decay about, let's call it $35 a day, but that's going against you. So the difference between this is you're making $15 a day positive, because the one that's shorter dated is going to decay faster. Okay, so how do we take a look at this now? Okay, so look at this here. I have the Zoom spread, and I have a couple of different calendars here set up. So the one here, if we look at the theta, is decaying about 29.29 per day. And the one that we bought here at the 120 is decaying only 12 per day, or sorry, 21 per day. So 29 versus 21. Okay, so the one I sold is decaying at 29. The one I bought is decaying at 21. So the difference between them is really what you're kind of making. So take a look at this right here. Here's the two contracts. So the one that I'm selling, and I got two contracts, decaying in my favor, positive, about 57. And then the other one that I have as a +2 here, it is decaying against me about 42. So 42 plus the other one that we have of 58, I get a net positive of about 15 per day. So that's where the theta of 15 is. And this calendar, you could see, is kind of right in the middle there. So with time, if I move this time figure over here forward, you'll see that this white line, which is the today line, will get closer to the green line. It'll go 1, 2, 3, a few more days into it. You can see the profit will be there. Now, price might go up, might go down, but you're kind of in that wheelhouse. So that's the way a calendar spread works and functions. Now, as you do these calendar spreads, what you could do is you could set these up to be more bullish. You could set them up to be more bearish. So let's take a look at what that looks like. So if we go here and we set that up, we could go in, and right now this one is right at the money. You can see I would be making about $15 a day. My delta is almost zero. So if it moves here for a little while, it's not a big deal. And I'm trying to make money from the theta decay. Now, if I made this 125, now what would happen is I get a more positive delta, and my theta reduces a little, but I've got more range now. So current price is here. I've got more range in this calendar over here. Okay, so if the current price is here, I've got more range this way. Okay, now I could go even further bullish. Okay, now I've got way more range. So between this line and all the way over here, I've got way more range. However, the chance of it kind of moving up is a little against me, because now if it pulls back a bit, I'm kind of losing out a bit. So you could do it kind of closer, but then it costs you more. You could do it even closer, and that is right at the money, or delta neutral. You could do it where it goes down. So if here's our current price, if it goes down and kind of goes down slow, I'll make money in this case, always making it from the theta or time decay. But it's just I've got a different range. Now, what I can do is stack different calendars at different points. I could put some here, I could put some here, I could put some here, I could put some here. Nobody says you got to put in 20 right at one spot. So instead, what I've done here in this example, I've got two right here at the money. Okay, so current price is right here. So I've got 2 right there at the money. I've got another 5 over here that are a little bullish. And I've got 7 that are even more bullish. So together, I've got a whole construction over here where I've got some calendars right here. I've got some calendars here. I've got some calendars here. And in total, this kind of gives me a theta of about 100. Okay, right now it's up about 114 for today, but 171 in total. So when I'm making a little from these calendars, a little from those calendars, a little from those calendars, and in total, that is our position. Now, some might say this is a double or a triple calendar, and yes, that is the case. But at the end of it, it doesn't really matter. I've got calendars spread out all over the place. I got some bombs of calendars all over the place. And as prices kind of wiggle in, I take those bombs off for a profit. That's kind of what we're looking to do really in this trade. And that's the way calendars work and behave. Anyway, I hope that helps, gives you some insight to calendars. I know they can be a little bit tricky because you're dealing with a different month in your expiration. Now, if you get into diagonals, you'll be doing a different month and a different strike. So that can be even trickier. But in general, this is kind of some of the stuff that I work with when it comes to the mentoring section, coaching with people for a longer period of time, and much more. So if you need some help, please reach out and I'll be happy to work with you one-on-one on video. Thanks again, and I will see you next time.